Hey everyone, welcome to the Legal Mix, where we discuss legal issues affecting DJs, musicians, entertainers, freelancers, and anybody else who might be interested. My name is Dimi, and today we're talking about business entities. More specifically, the difference between a sole proprietorship, an LLC, S-Corp, and C-Corp, which will hopefully give you a better idea which business structure is the right one for you. So let's get into it. Sole proprietorship. This is the most basic structure and one that's preferred by a lot of independent contractors. It means that the business is owned and managed by an individual. It's a pass-through entity, which means that income generated at the business level is passed on to the individual. It's subject to the self-employment tax rate of 15.3%, which covers Social Security and Medicare taxes. Under this structure, owners are personally liable for the debts and obligations of the business. This means that their personal assets, so car, bank accounts, house, may be used to satisfy outstanding debts incurred by the business. Consider this example. Joe is a DJ and he operates as a sole proprietor. While setting up for a private event at a venue, Joe damages some valuable artwork. The venue could go after Joe's personal assets, so his car, his bank account, his house, in order to pay for the damaged artwork. Limited liability company, or LLC. This is the preferred structure for a lot of small businesses. It shields the owners from being personally liable for the debts and obligations of the company, while also being a pass-through entity. Like in a sole proprietorship, income is taxed at the individual level, and owner-operators are subject to the self-employment tax of 15.3%. Now, although generally the owners are not personally liable for the debts and obligations of the LLC, this protection is not absolute. Individual owners cannot commingle their personal finances and assets with that of the company, and they cannot conduct wrongful or fraudulent action. In those situations, courts will pierce the corporate veil and the owners will be personally liable for debts and obligations incurred. Corporations. There are two types we should discuss: C corporation and S corporation. A C corporation is used by global companies and they're much more complex than the previous structures that we discussed. They're subject to more regulation, more administrative overhead, but even more importantly, they're taxed twice. Income is taxed at the corporate level, subject to the corporate tax, and at the individual level. Therefore, a C corporation is not very practical for small businesses. On the other hand, an S corporation might be a little more practical for small business owners. In essence, it's a hybrid between a corporation and a sole proprietorship. On the one hand, owners are not personally liable for the debts and obligations of the business, but on the other hand, this is a pass-through entity where income is taxed just once at the individual level. An S corporation can reduce the overall tax liability for an owner-operator with some careful financial planning. Consider this example. Joe has set up his DJ business as an S corp. In 2019, the company generates $100,000 in profit. Out of that money, it pays Joe a reasonable salary of $50,000. A reasonable salary meaning that is the market rate for DJs in that market. Joe is liable for paying the self-employment tax rate of 15.3% on the $50,000. His salary is a business expense, which means that his salary reduces the overall profit of the company by $50,000. The remainder of this money is passed down to Joe as income derived from his company, which is subject to his individual tax rate. Therefore, by using the S corp structure and paying himself a reasonable salary, Joe is able to reduce his overall tax liability than if he were to pay the self-employment tax rate on the entire $100,000 income. I should mention that LLCs may elect to be taxed as an S corp. This is very practical for single-member LLCs. It allows the owners to have the flexibility of an LLC while being able to utilize this tax structure of an S-Corp whereby they can minimize their overall tax liability. I think it will also be helpful to briefly discuss the benefits of a holding company. This is typically used by the global conglomerates such as Amazon and Google, but it could be beneficial to individuals who have several different businesses. Now let's use the following example to better illustrate what I mean. Joe has 3 businesses: a DJ company, a photo booth company, and a graphic design company, each one its own LLC. Joe decides to create a holding company, Joe Holdings LLC, which owns the 3 subsidiaries: the DJ Company LLC, Photo Booth Company LLC, and Graphic Design Company LLC. What this does is it protects each individual subsidiary from the debts and obligations of the other subsidiaries. Therefore, if the DJ business is sued by a venue, the venue, from our example above, cannot go after the assets of the other companies. Now, this structure also minimizes the overall tax liability. So in 2019, if the DJ company was very profitable, but Joe operated the photo booth company and the graphic design company at a loss, the holding company can offset the profits of the DJ company by the losses incurred by the other 2 businesses, thereby decreasing the overall tax liability. So again, with careful financial planning, it's possible that a holding company can decrease the overall tax liability that Joe has to pay. To sum it all up, the right business entity will minimize the overall tax liability for the owner, pay less taxes, while also protecting the personal assets from the debts and obligations of the company. While I discussed some of the most common structures, there are others, so therefore I encourage you to contact your tax professional, accountant, and/or attorney to discuss what's the best business structure for you. With that being said, thank you for tuning into the Legal Mix, and I'll see you next time.